Welcome to NMC News. I'm Isha. Now the top news of the day. Fresh tensions in the Middle East triggered global concern after uncertainty grew around the United States-Iran ceasefire talks. Oil prices surged close to $105 per barrel as investors feared possible disruptions in crude supply routes. The situation affected global financial markets while officials in Washington and Tehran continued diplomatic discussions to prevent further escalation. The rise in energy prices also increased concern over inflation and economic pressures in oil importing nations across Asia and Europe. Global technology stocks faced pressure after discussion in South Korea regarding possible regulations of excess artificial intelligence profits creates uncertainty among investors. The remarks came from a presidential advisor during policy discussions on AI industry growth and revenue distribution. Markets in Seoul reacted sharply before recovering partially later in the session, while major semiconductor and AI linked companies remained under close watch globally. Analysts said investors were cautious ahead of important inflation data expected in the United States later this week. The Russia Ukraine conflict continued to remain a major geopolitical concern as international observers monitored renewed military activity in eastern Ukraine during ongoing diplomatic efforts for temporary ceasefire arrangements. European leaders urged restraint and called for humanitarian support in affected regions, while defense officials from both sides exchanged accusations regarding continued attacks near strategic. The conflict's prolonged impact continued to affect global energy prices, food supply chains, and international security discussions across NATO and European Union member nations. Now it's time for a short break. More news on the other side. Welcome back. Prime Minister Narendra Modi addressed economic concerns while urging citizens to reduce unnecessary fuel and gold consumption to help protect India's foreign exchange reserve amid rising crude oil prices and rupee weakens. The remarks came as financial markets remained volatile due to global geopolitical tensions and increasing import costs. Economists stated that the government was closely monitoring inflation risk and external trade pressure affecting the Indian economy. Indian authorities and market regulators closely monitored the weakening rupee after the currency touched a record low against the US dollar amid rising crude oil prices and foreign investors' outflows. Financial analysts said higher import bills and global geopolitical instability contributed to the pressure on the rupee. Banking and IT stocks witnessed significant selling in domestic markets, while oil and energy related companies recorded gain due to rising international crude prices. Senior Congress leader Sukhjinder Singh Randhawa criticized the central government over unemployment, inflation, and the broader economic situation during a political address in Chandigarh. He demanded a special parliamentary discussion on economic policies and accused the government of failing to address rising inequality and financial challenges faced by ordinary citizens. The statement intensified political debate as opposition parties continued targeting the center over economic management ahead of upcoming policy discussions. Now it's time for another short break. More news on the other side. Welcome back. Indian stock markets witnessed a heavy selling pressure as the BSE Sensex fell more than 800 points and the Nifty slipped below the 23,650 mark amid fears linked to rising crude oil prices and geopolitical instability in West Asia. Investors' wealth worth nearly rupees 5 lakh crore was reportedly wiped out during the session as foreign institutional investors continued large-scale selling in the equity markets. Analysts linked the decline to inflation fear, rupee depreciation, and uncertainty surrounding US-Iran negotiations. The Indian rupee hit a fresh record low against the US dollar as elevated crude oil prices and foreign capital outflows increased pressure on domestic financial markets. Markets experts stated that India's dependency on imported oil made the economy vulnerable to global energy disruptions. Banking, IT, and consumer sector stocks remained under pressure, while oil exploration companies such as ONGC and Oil India gained during trading due to expectations of higher revenues from rising energy prices. Shares of several Indian IT companies, including Infosys, Tata Consultancy Services, and Tech Mahindra, declined sharply as investors reacted to global uncertainty, weak market sentiments, and concerns related to international technology sector growth. The broader IT index fell nearly 3% during early trading, making it one of the worst performing sectors of the day. Analysts said global inflation fear and slowing corporate spending continue to impact investors' confidence in technology stocks. That's all in this news bulletin. Stay tuned to NMC News for more updates.